Okay, so maybe at some point we'll actually get through chapter 2. Hoping to finish up everything today and maybe leave some time for questions on Wednesday. So hopefully you're well into your homework and you can come to class with some questions on Wednesday. That would be ideal. So for today, here's our agenda. So we're going to pick up where we left off. We were talking about, we were doing calculations, and I'll do a little bit of review just to kind of refresh your memory on how we do those calculations for when we go from an individual that is salaried to calculate their hourly rate in order to determine their overtime rate. And these are salaried individuals that are entitled to overtime pay because they're not exempt from the FLSA. But we've got a couple of little complications to talk about today. And this is mainly for individuals who work fluctuating hours. So maybe they work 30 hours regularly, or not regularly. They work 30 hours one week, and then the next week they work 55, and it's sort of an ongoing situation. And we have a couple of different calculations to determine, again, what their overtime pay should be. Remember, all of this is based on what's our overtime rate for those individuals. So we're going to go through those calculations today. We're also going to talk about a couple of other, well, probably more than 2 other methods of payment. So not everybody is paid on the basis of time, right? And their time inputs. Some people are paid based upon their units of production. So, for example, if they inspect items, they are paid by the number of items that they inspect. Or if they assemble items, they're paid by the number of items they assemble during their regular shift. Well, those individuals are still subject to the rules of the Fair Labor Standards Act, and so they have to be paid minimum wage, and then they would have to be paid overtime for any hours over 40. So that makes it a little more complicated as well, because we're going from calculating their pay based on units of production to what do they get paid for that overtime. So we're going to talk about how we do that, how we go from A to B in that. And then we do have a few other items, non-calculation type items that we have to finish up in talking about the FLSA. We want to go over some of the child labor requirements, some of the timekeeping requirements, and record-keeping requirements. And hopefully that we will be able to get through that today. Now, I do have a quiz that I've put together. Don't worry. Yes, it is a pop quiz, and you haven't seen it. But it's a quiz that just kind of reviews everything that we've done in this chapter. Now, I'm not sure if we're going to be able to have enough time to get to it today, but if we don't get to it today, we'll get to it on Wednesday. So that's what we're doing today. Any questions before we get started? How's the homework going? I gave you an extension. Obviously, we needed one because we hadn't finished all the lecturing up. But is it going all right so far? We're working on it? Okay. All right. Well, like I said, make sure you do get some work done on. I mean, obviously, it's due on Thursday night, so don't leave it till the last minute. If you email me with questions at 11 o'clock at night, you are probably not going to hear back from me. So just make sure you get working on it so that we've got that opportunity to go through some of those questions on Wednesday. I'd much rather have you come to class with questions about the homework than me pick out questions to go over, types of questions to go over, okay? All right, so let's get moving here. Okay, so let's just I'm going to go back to, and I know we already went through this example, but I just wanted to do kind of a reminder of how this works. Remember what we've got to do. We've got several steps when we're determining, oh, that's a messy board. When we have to go from somebody who's salaried to calculate their overtime pay rate, We've got those steps that we've got to go through. So remember, we've got, is this the one I wanted to go through? Yes, it is. Okay, so we've got G, that non-exempt employee, $2,200 a month, paid biweekly. How many pays is that in a year if it's biweekly? Does anybody remember? Easy to confuse that biweekly and semi-monthly. So biweekly, every 2 weeks, right? So how many would there be in a year? 26, right. We got 52 weeks in a year. So if you're...
This still gets confused. You have had tons of schooling that
yes.
Bi-weekly thing. People mess it
up. The biweekly and semi-monthly. It is. It is. And we've got, I think we've got another problem here that we're going to go through that's a semi-monthly pay. So, and she doesn't get paid for 40 hours regularly. She works 35 hours. So that's another little complication that we'll add to, another wrinkle that we'll add to it. Okay, so she's paid biweekly. She worked 11 and a half hours of overtime in one pay period. Now from this, we don't know which week it was, and it doesn't really matter for our purposes, which, you know, she may have worked it in 1 week. It may have been spread over 2 weeks, but she worked 11 and a half hours of overtime in that pay. The first thing we have to do, remember, is we have to annualize, and that's a bad one. The continual quest for for these that work. All right, well, so we've got to annualize that pay, which means we're going to take, they've given us per month how much she makes, so we're going to take her monthly pay times 12. And each of these steps, essentially, we're using the, well, except for this second step, we're using, well, yeah, I guess we are in the second step. There's a third step, I mean. We're using the information in the previous step and bringing it down to the next step. Second step, remember, what we're going to do is divide our annual salary which is what we came up with in step 1. This is our annual salary. So we're going to divide our annual salary by the number of pay periods. So 26 pays in a year. They did the 2,200 times 12, 26,400. Divide that then by 26 pays. She normally would get paid $1,015.38 each pay period. So if there was no overtime, that's what this employee would be paid on a normal basis. So there's our step 2. Step 3 then, we're going to divide our annual salary, and this is where we're going to, at this point is when we're going to start our calculation of the overtime rate. Okay, sorry. I know it's hard to see, I'm so short, it's hard to see me over that. So we're going to divide our annual salary by 52. That's our 52 weeks. So again, this is to calculate our regular salary over here. And then this is to calculate our weekly pay. Step 4, so here we get $507.69 that she's ordinarily paid on a weekly basis. The next step, step 4, we're going to take our weekly pay. Oops. So you can see we calculated that up here. We're just going to bring that down here. We're going to divide our weekly pay by the standard hours that are worked. Now, in this case, she works 40 hours. If that were 35, we wouldn't use 40, we'd use 35 or 30 or whatever is appropriate. So divide our weekly pay by the standard hours. This gets us our hourly rate. Step 5, and again, what we're trying to do here is to get to that calculation of the overtime. Step 5, We're going to take our hourly rate times, what's our overtime? How many times? I'm sorry, I said that really unclear. So normally to calculate overtime, our hourly overtime rate, we're going to multiply it by 1.5. Exactly. So we're going to take our hourly rate times 1.5 to get our overtime rate, which they've done here. So they divided the 507.69 by 40, regular rate, multiply the regular rate by 1.5, their overtime rate of 1904. The last step, we're going to take our regular salary, which we calculated up here in step 2, and we're going to add our, we're going to take our overtime rate times our overtime hours. We're going to add that to the regular salary to get our total. Okay, so just a reminder of what those steps are, since it's been a little while since we went through that. Any questions about what we did here? I know it's a lot of steps, and it's a lot of steps to kind of remember, but I've got that posted, remember, up on the whiteboard images link in Canvas. So you're welcome to pull that up to remind yourself when you're doing the homework. All right. Go past these. Okay, now here's this little wrinkle that I talked about. Now we've got a non-exempt employee, Felicia. She's paid $1,600 a month, but she gets paid 35 hours. Normally she works 35 hours a week rather than the 40. We've been using 40 up to now, but now we're going to use 35. She's paid semi-monthly, so 24 pays a year, right? Twice a month. The overtime is calculated as regular hourly pay between 35 and 40 hours per week. Now, this is worded kind of funny. What they mean here is that she's going to get paid for overtime rate for hours over 40, but she's not going to get paid the overtime rate for those hours between 35 and 40. Regular rate is going to be up to 40 hours still. It's just that her normal pay, normally she only works 35 hours. So we're going to have to add onto her regular pay those additional 5 hours that she works up to 40, and then we're going to have to add on her overtime pay for the hours over 40. So we've got kind of 2 additional components to add to her regular pay. Okay? Does that make sense? Okay. So 1.5 times after 40 hours. So of the 16 hours of overtime in one pay period, now they're calling everything over 35 hours overtime. It's a little confusing because she's not getting paid overtime. It just means she worked more than her normal 35 hours. Okay, so it's a little confusing. That's why I wanted to clarify in this particular problem. So of the 16 hours of total time over 35 hours, or overtime, that she worked in one pay period, 6 of those hours are over 40 hours. So that means that she worked her regular 35 hours a week, but then she worked an additional 16 hours. Of those 16, 10 of them were at her regular rate of pay, 6 were at an overtime rate. Is that clear? Yes? No? Hello? Okay, so same basic steps, but like I said, at the end, we've got this extra component. So again, first thing we're going to do is annualize her monthly pay. So she gets paid $1,600 a month times 12 months, so $19,200 annual gross pay. Next step, divide her annual salary by the number of pay periods. So there's 24 pay periods. That $19,200 divided by 24 gets us to $800 on a semi-monthly basis. So twice a month, if she works 35 hours a week, twice a month, she's going to get $800. That's going to be her regular salary. But she worked more than 35 hours a week. So the next step, same as well. We're going to divide the weekly pay by the standard hour. I'm sorry, I skipped a step. We're going to divide the annual salary by 52. So her weekly rate of pay for $19,200, 52 weeks, $369.23 per week. Next step is also the same. Divide the weekly pay by the standard number of hours. So you can see here, now instead of dividing by 40, we're dividing by 35. Because she normally works 35 hours. So $369.23 divided by 35 hours, she normally gets paid $10.55 an hour. Okay, so that all comes out to that $800 twice a month comes out to $10.55 an hour because she works 35 hours a week. All right, now we have to calculate what her overtime rate is. So same step here, we're going to take the hourly rate times 1.5 to get her overtime rate, $15.83. Last step here is what's different. So now, instead of just adding the standard rate to the overtime, we also have to add in those 10 hours extra that she was paid at her regular rate. Okay, remember, so we do need this well, I guess it's over here, this regular rate. She worked 10 of those hours at her regular rate. That got her up to 40 hours in each of those weeks, and then 6 hours of overtime. So we've got to add those three components together to get to her gross pay for the period. Questions? Yeah. Say that one more time, a little louder. Not necessarily. So it gets a little hairy when you have a semi-monthly pay period and you have to calculate the overtime, because remember, our overtime is calculated based on 7 consecutive days. With a semi-monthly pay period, oftentimes those 7 consecutive days are interrupted by the end of the pay period. So oftentimes you'll have to keep track of what happened in the previous pay period to see if there was any overtime that had accrued during that time. Am I answering your question? Are you sure? Okay, yeah, and we're going to get into that a lot more, especially in the last chapter when we talk about accruing for accounting purposes. When we accrue the amounts that are due for accounting purposes, we go into that in a lot more detail. But absolutely, it can be really confusing. You've got to keep track. The same thing happens on a monthly pay basis as well, because you're keeping track on for overtime purposes on a 7-day, Saturday to Friday or Sunday to Saturday. You're keeping track on a 7 consecutive day basis. But when we're talking about semi-monthly, that pay period may end on Tuesday. It may end on Thursday, Wednesday, any time during that, because our months obviously are not, they don't cooperate when we're on a semi-monthly or monthly schedule. Yes, yes. The overtime, yes. So right, and they gave us that information, but we will get to some problems later where we have to figure that out as well. How much overtime in that period, because we've got to keep track of what we paid before. Yeah. Is that okay? Sorry. Yeah, it's the timing is oftentimes one of the more confusing aspects of it. Yeah, absolutely. Okay, so any questions about the, yeah.
So if the 16 hours of overtime is monthly has 6 hours over 40 hours per week,
Mm-hmm.
how do you explain the regular rate with multiplied by 10? Like how do you define what does the 10 hours mean if the 6 hours are over 40 hours a week?
Okay, so normally she works 35 hours in a week. They are not legally required to pay her at an overtime rate until her hours exceed 40 hours in a week. So even though she normally works 35 hours, that's what she's contracted to work, they're only going to pay her at her regular rate for those first extra 5 hours. Okay? Then after she reached those extra 5 hours, that's when they're legally obligated to pay her at the overtime rate. So
that means that the 10 would be the regular hours.
Mm-hmm. Yes. It's just not part of her regular schedule. She worked 10 hours more than her regular schedule, but it didn't exceed, those 10 hours didn't make her exceed 40 hours in the work week. Yeah. Is that?
Yeah, I got it.
Okay. Yep. That's why we've got those two different amounts that we have to calculate. Other questions? Great questions. Okay. Clear as mud. All right. Let's move.
That was a good question too. So
Mm-hmm.
my sister, she works, I can't remember what, but it's like 32 or 34 hours a week.
Yeah.
And that's all she wants to work.
Mm-hmm.
About ready to go into retirement.
Mm-hmm.
And so this would be applicable to somebody else.
Yep.
Because not everybody works a 40-hour work week.
Exactly. Or maybe she gets like, with 35 hours, maybe it is like 8 to 4, but she gets a half hour for lunch that they don't pay her for. That would be, well, I guess that doesn't come out right. Or an hour for lunch. Sorry. That's not paid. Okay. Whoops. All right. Now, let's talk a little bit. This is really fun. Let's talk a little bit about employees. Again, they're still salaried, so they're paid a set amount. They're still non-exempt, so they are entitled to that overtime and minimum wage of the FLSA. They're not exempt from those provisions of the FLSA, but they work a fluctuating work week. So sometimes they work 30 hours, sometimes they work 50 hours. They're kind of all over the place with their work. There are a couple of different ways that we can calculate, again, for overtime, because they're not exempt, so we have to pay them at the overtime rate if they work more than 40 hours in a week, right? So two of those ways, let me erase this. And if you recall, I don't have it up here and I'll show you. I'll give you a peek. You have access to this worksheet in that in-class activities. These are the ways that we're going to go through. Okay, I'm not going to pull that up right now because I'm actually going to use those calculations from going through this, but you have access to that. That's up in Canvas. Okay. All right. Two of the first ways of doing this, my eraser go. So again, fixed salary. So they've got like a monthly salary or an annual salary or what have you, but because of their classification, their job classification, they are not exempt from the FLSA, so they're not. So they still have to be paid those overtime hours. There are a couple different ways to do this. The first one, overtime is going to be calculated by dividing our normal salary by the total hours that were actually worked. So if they worked 47 hours in a week, we're going to divide their normal salary by 47 hours. And then we're going to use that result for our overtime calculation. Second way is to divide it by 40 hours. So instead of the total hours that they worked, the amount is divided by 40 hours. This is going to result in a higher pay and a higher overtime rate. I'm going to go through a couple of different examples for you so that you can see how this works. Again, this is a fluctuating work week. Okay, so let's say we've got somebody, they have a $35,000 salary. All right, and they worked 45 hours in a week. All right, in the first case, we're going to calculate the overtime, we're going to divide it by the total number of hours worked. So again, we have to figure out how much they make in a week. So we've already annualized that salary. We don't have to do that first step. But the first, so in our first step here, we're going to take the 35,000 divided by 52 weeks, and we come up with 673.08 per week. All right. We're going to then divide the second step. We're going to do this second step. Divide the normal salary of 673.08. Divide it by 45. So we're dividing, this is the difference here is what we're dividing it by between these two methods. Divide it by 45. We come up with $14.96 per hour. Now we're going to use the overtime premium method in doing this calculation. Remember, either method is going to get you the same result, but the overtime premium method would be the more common method of using for doing this calculation. So $14.96 per hour is the regular hourly rate. $14.96 times 0.5, so that's our overtime premium, times 0.5 gets us to $7.48 an hour. So this is the regular rate, and this is the overtime premium rate here. All right. Then we're going to take 748 times our 5 hours of overtime. That's our hours of overtime. To get our overtime premium of $37.40. Did I do this right? Yeah, 52, $14.96. And then 5. We're going to take our regular rate, $673.08, plus the overtime premium. This is the total overtime premium. So that overtime premium for all hours worked over 40, because the rest is a fixed salary, okay? So $673.08 plus $37.40 for a total pay of $710.48. Again, this whole calculation is in Canvas, so you can follow along with it, okay? The overtime premium is determined by calculating what the overtime, what the regular rate is. Because so this is they are paid a salary, $35,000 salary. That is to include all the hours up to 40. Okay, so all we have to pay them over that is the premium amount. Why? I guess.
Like is it the business owner that decides? Well, what is the overtime premium what you're adding to the regular rate, or is that's what you get paid per hour for overtime? Instead of time and a half, I mean.
Instead of the time and a half, I see what you're saying there.
It's not the same, is it? Or is it?
Yeah. I think I see what you're saying there.
Like, why is it less than what they normally earn per hour?
So there's well, they normally, yeah, I see what you're saying. Like that this should be 1.5 here and add that overtime onto the regular of 673.08. I see what you're talking about there.
So why is this different?
I'm not sure it should be. You're right. Now that I'm doing the calculation, extra overtime premium. Okay. You know what? I'm not sure that's right. I think it should be, or the calculation, let me see the calculation that I did. 7.5 times 5 hours of overtime, 7.8.
Would numbers
So-
be 14.96 and 1.5?
I think it should be,
Yes.
but they've got the overtime premium listed here. I think you're right. Because all we're doing, the only difference is what we're dividing this by. Yeah, I don't.
The whole year that overtime we pay out.
Yeah, because you got those extra 5 hours. You got those extra 5 hours and you're only being paid for half of it. Yeah, no. Yes, good catch. So, 1.5, let's change this now.
Can a company change the overtime period if they want to?
They can make it higher. They can always pay more, but not less. At a minimum, they have to pay what's equivalent of 1.5 times the regular rate in that overtime. Right. So, which ones do I want to change here? Sorry about that, guys. Let's see. 1496. Now I got to actually use my calculator. $22.44. Let's not use the overtime premium. Let's just call that the overtime rate. So 22.44, and then 22. Although, you know what? Wait a minute. Now that I'm thinking about this. It's not 50. Yeah, I think it is too, now that I think about it. Because it's right. Right. I think so too, now that I'm thinking about it. I tell you what, before we go on to the next one here, I do want to talk about the BELO plans, which is the third method, but I want to go through this calculation one more time on my own before I could totally screw you up. And we'll come back to it so that I can 710.48. Yeah. I think so too. But I can't explain to you off the cuff why. So let me go through the calculations again, and maybe like I said, we'll skip this part here. Let's talk about the BELO plans though, because and if I get through this, if I think this through before I leave today, I'll send you out an announcement. Otherwise, I'll send you an announcement tonight. But we'll go through it again on Wednesday. All right, BELO plans. So skip that second part because I want to go through that a little bit more. The BELO plans. Okay, so what exactly is a BELO plan? Hello? Let's try this again.
I think in the book talking about the
Yeah. There we go. All right. So this is otherwise known as a bona fide executive administrative or professional plan. So this arrangement, and it has to be agreed upon between the employer and the employee, and everybody has to understand exactly what they're agreeing to. So it allows, and this is used again for fluctuating work weeks, but it's generally used for really fluctuating work weeks. So an example would be like maybe a technician, a field technician, like think Metronet. Somebody who they don't know exactly how many calls they're going to get during the week. If they get 20 calls, they may be out there working 58 hours. If they get 3 calls, they may be working 20 hours that week. So it's kind of all over the place where they're working. So it allows employees whose work hours fluctuate from week to week to have a guaranteed weekly salary. It actually works out pretty nice for the employees, by the way. Unless, of course, they're working a whole lot of overtime, then it's no particular advantage. If they're working regularly less than their agreed upon salary or their agreed upon hours, they still get paid the same salary. They're never going to go below that minimum salary threshold, but they can get paid more than that. Okay. So it's a predetermined number of hours, including overtime, helps to stabilize employee earnings, which is beneficial to the employee. So they get a guaranteed weekly pay, a fixed salary. So it only applies to employees, though, whose work varies unpredictably. So some weeks, there's an example, some weeks 30, other weeks 55. They don't really have much control over what their work hours are going to be. So folks who would be on call a lot, right? There is a predetermined overtime rate that's built into their salary. They're going to get paid overtime, even if they don't work that overtime. There is, by law, a minimum and a maximum number of hours in the contract. So the contract has to specify a minimum of 40 hours be paid and a maximum of 60 hours. They're still going to get at least 1.5 times the regular rate if they work over and above what their contract says. But remember, their contract, the overtime that they work is already built into their contract. It's just if their hours go over and above what the contract is, then they get overtime. Okay. So, for example, employer and employee agree on a BELO contract, guarantees pay for up to 60 hours. The employee is paid for 55 hours at a set rate. That would include 15 hours of overtime. So it's just built in. It's baked into the rate that they're getting, those 15 hours of overtime. If the employee works less than 55 hours, they're still going to get that same salary. If they work more than 55 hours, then they have to be paid overtime for the hours over 55. So they get paid for up to a certain amount, whether they work it or not, and then anything over that, they'll get paid overtime, if it's in overtime hours. Some of the benefits that your book talks about this: predictable pay for the employee. The employer, it helps to keep them out of trouble with regard to FSLA compliance as well. And it's easier. It's easier to administer. It's up, same salary all the time up to a certain number of hours. Once they exceed those hours, then they get paid overtime. Okay. All right. So let's take a look at what that looks like in practice here. Oh, close this. All right. So in this case, so this is the same one that you have there. With the BELO plan, can you see that okay? Should make it bigger. Might be a little bit easier. So in this case, with this BELO plan, the maximum number of hours is 42 hours. So they've agreed that the employee is going to get paid for 42 hours, whether they work 42 hours or not. So those 2 extra hours of overtime are going to be baked into the amount that they're paid. So if they work 38 hours, they're still going to get paid for 40 hours plus 2 hours of overtime. So that's pretty decent, right? All right, so in this case, it's the same, I think it's the same scenario as above. $35,000 a year. We did the calculation up there. Well, let's see. Maybe we didn't. So to figure out the weekly rate, the normal pay per week, in this case, I think the second calculation figured out the hourly rate. That's where that 1683 comes from. Just assume it right now until I can clarify all the steps there. So 1683 per hour times the 42 hours, 708.86, plus the overtime premium. Now this is correct. It's only an overtime premium at this rate because the 2 full hours are already calculated up here. We just have to calculate the additional half at this point. Overtime premium, $842, 2 hours, $842 comes to $16.84 an hour for the overtime. Add those two together, regular salary is $725.70. That's what this employee is going to get paid every week up to 42 hours of work. Yeah.
So you would get the same number even if you did it the 1682 times 40 and then the other times time and a half.
So are you asking me where the 1683 came from?
No,
Or okay, I'm sorry.
Instead of calculating the total hours, if you did 40 and then instead of doing it times 0.5, you did it time and a half, it would still be the same total, wouldn't it?
Yes. So if you did 1683 times 40 and then multiplied the 1683 times 1.5 and then multiplied that times 2, yes, that part would be the same. You're going to come up with the same answer. Yep. So you're going to still come up with the 725.70 in either scenario.
What happened with the previous problem?
No, the previous problem, no, that was a different, that's trying to figure out if the 1 hour of the 1.5 is in there. Yeah. So, but this one, so that 1683 is calculated in the second scenario here, which we'll go through on Wednesday. Where am I here? Okay, so the regular salary is $725.70. So if this employee worked 42 hours, they'd get $725.70. If they worked 38 hours, they'd get $725.70. They worked 15 hours, they'd get $725.70. Okay, but in this case, they worked 45 hours. So that additional amount, those additional 5 hours have to be paid. So in this case, we are multiplying by the 1.5. I know it's more comfortable to use the 1.5, even though it comes out the same. I get it. That's kind of what we're used to. 1.5. So overtime rate is $25.25. We're going to add the regular salary plus the 3 hours of overtime. So in this case, it would be $801.45. The BELO plan, you have a problem in your homework that I get every single time it comes up. I get lots of questions about it. Okay, so I suspect that on Wednesday that will be one of the problems that you guys want to go through. And if you don't say it, I'm going to go through it anyway. So I will pick at least one problem to go through. Okay, even though conceptually it's really kind of easy. You're going to get paid this amount up to this many hours, and then after that, it's just the calculating the overtime rate that kind of adds to the complication. All right. Questions? How are we doing on time here? 1:36. That's not bad. I'm only 6 minutes over. Okay. You guys know me. That's pretty good for me. All right. So all right, so let's talk about piece rate. Piece, P-I-E-C-E, not P-E-A-C-E. So with piece rate, this is where employees are paid for a unit of production. Somehow I use the example of inspections, like the number of items that are inspected, maybe in manufacturing, or the number of units that are produced, that sort of thing. So they're paid by the unit, but they still have to be paid minimum wage, and they still have to be paid overtime based on hours. So there are a couple of different ways to calculate overtime when we're doing, when we've got somebody that is earning money on a piece rate. First one, we take the number of units produced times the unit piece rate to get their regular earnings. So I produced, let's say I baked cakes. I baked, where's my blue one? I baked 40 cakes. Sorry, I know this isn't very dark. I don't know where my blue one went. So 40 cakes, and I get $10 per cake. So my unit piece rate is $10 per cake. So $400, right? There's my regular earnings. I really want, there it is. And then it took me, so 400 regular earnings. Now I've got to figure out how many hours it took me to make those cakes. So let's say it took me 20 hours to make those cakes. Divided by 20, my hourly rate then is what, 50? Is that right? No, I told you, don't ask me to do this in my head. What? 20, yeah. Per $20 per hour. Now, if I were entitled to overtime, let's say that was in 1 week. No, 20 hours, that's still not overtime, or is it? That's probably not a very good example to do overtime, but my overtime rate would be based on this $20 per hour. So my overtime rate, if I worked overtime, will be $30 an hour, right? Or using the overtime premium, which we all love, we'll take our hourly rate times 0.5 and then our regular earnings plus the overtime premium times our overtime hours to get our gross pay. So that's the first method of doing it. And I think we've got some examples that we can look through here too. Is we figure out how many hours it took us, and then that's our hourly rate that we're making, and then we base the overtime rate on what we made per hour when we're in our regular earnings. Second method is we're actually going to use our piece rate for our overtime rate. So we'll take the number of units that were produced in 40 hours times our piece rate. Add to it the number of units that were produced in overtime times 1.5 times our piece rate to get our gross pay. So we're actually multiplying that the piece rate amount times 1.5. So let's look at a couple of examples that are better than mine because that didn't come out to any overtime. Okay, so we've got, this is units inspected. So 4,812 units were inspected in a 47.25 hour week. 600 of those units were produced in overtime. So we've got Mustafa is paid 12 cents per unit. In calculating the gross pay at both methods, the first method, we've got the 4812 units times the regular rate of 12 cents. So $577.44 in regular earnings. He worked 47.25 hours. So we've got to figure out the hourly rate based on how much time he spent. So $577.44 divided by the full number of hours, not by 40, but by the full number of hours worked. He is making a rate of $12.22 per hour. Overtime premium is $6.11 per hour, that divided by 2, and then we're going to add the 2 together, $577.44 plus the 7.25 hours of overtime times $6.11 to get the total gross pay of $621.74. So in this case, we don't really need to know how many units were produced in overtime. We just need to know the total number of units that were produced and the total amount of time that was spent. In method B, we have to keep track and know how many units were produced in overtime. So we have to have that separated. Method B, we're going to take, and they told us up here, so 600 of the units were produced in overtime. So we're going to have to subtract that 600 from 4812 to get what was produced in regular time. 4212 units were produced in regular time times the regular rate, 12 cents per unit. All right. And then we're going to add to that the 600 units that were produced or inspected in overtime. And we're going to multiply that piece rate of 12 cents per unit times 1.5. Add those two together to get the total gross pay of $613.44. Questions? So those are the two methods for piece rate. Okay. Next up. So here's another example. Royson, paid to inspect shellfish, paid 8 cents per case, inspected 6,897 cases in 43.5 hours. 423 of those cases were inspected in overtime. So gross pay using both methods. First one, again, take the 6,897 total number of cases times the regular rate to get the regular earnings. Divide that by the total number of hours that were worked. So 43.5 hours, $12.68 an hour, to calculate what that overtime premium is. And then we're going to add those two together. So $551.76 plus the overtime premium, 3.5 hours were worked in overtime.
Thank you for letting me join.
You're welcome.
I appreciate it.
Any old time. Add those two together to get the total gross pay. So it's the same method as, oops, where are we? There we go. Units produced times the piece rate, regular earnings divided by total hours worked to get the hourly rate times 0.5 premium to get the overtime premium. Now, the 1 hour, I know what you're thinking, Carla. You're like, where's the 1 hour? You get it? Okay. Because it's right here in this calculation in there. Yep. I know, it's kind of mind-bending. All right, and then the next method, again, we're going to have to subtract the 423 cases from the total, 6897, and those are calculated at different rates.
So is it always better to get paid in like overtime premium rather than the time and a half?
Well, I actually think for these, you have to use the overtime premium. I'm not quite sure how you would calculate it using the 1.5. Since the 1 is already included in there. I think in these examples, well, in this example, I think it's just going to vary for each case. Because in this case, the employee is going to be paid more with method A than method B. And I think in the last one, it was exactly it was more with method A as well. That's probably not constant, though. That would probably vary depending upon the circumstances. Okay. Questions about those two methods? Okay. So again, the second one, you're just going to, the second one's pretty easy. You just have to remember, and this is, again, a lot of students forget, to subtract out the units that were produced in overtime, because you're going to calculate each of those pieces at different rates.
So, like,
Mhm.
test, and it says calculate to using overtime income or calculate it by unit paid.
Mm-hmm. Yes, it would be very clear to you which one to use. Yes, don't worry about that. All right. Now, some other types of incentive plans. So incentive plans are, methods. Usually they're, for individuals who are involved in sales, to encourage them to sell more. And the idea behind it is you're creating more revenue for the company, and so therefore you're going to be rewarded for it. And oftentimes they're used in a tiered manner, meaning if you meet the first requirement, you're going to get X amount more. You meet the second requirement, then anything over and above that first requirement, you're going to get even more, and so on and so forth. So that's what they're talking about here. So for example, say you get 18 cents per unit inspected up to 2,000 units per week. So if you inspect 1,000, you're going to get 18 cents per unit. If you inspect 1,500, it's going to be 18 cents. 2,000, it's going to be 18 cents. But if you go above and beyond that, and you get to 2001, then for each unit after that, you're going to get 24 cents. Now, for the first 2,000, you're still just getting the 18 cents. But that increase comes into effect once you get over that amount. So it's tiered. And then a third tier would be 36 cents a unit if you produce more than 3,500 per week. Okay? Fairly simple to conceive. Any questions about that type of incentive plan? Makes sense? Okay. Commissions are another way. So usually with a commission, there are certain positions where it's 100% commission. Like you don't make anything unless those outside salespeople, they don't have to be paid a minimum salary. It could be solely commission based. But in most instances, you'll have some combination of a salary plus commission. So commission being an incentive plan. So if you make a certain number of sales, then you get a percentage of those sales. So for example, we've got Sam. What is that? So Sam sold $40,000 of product. His quota is $31,500. Now it's gone. There's my ears. That wasn't just me, was it? Okay. Now it's back. It's really high pitched. Huh? Yeah. All right. At least I know my ears are young enough to hear it. Okay, so Sam sold $40,000 of product. His quota is $31,500, so he's got to at least sell $31,500 of product. He gets 2% over and above, in excess of quota. His annual base salary is $30,000. So his salary is $30,000, regardless of how much he sells. But he's expected to sell $31,500. No, the employer would set that. Mm-hmm. It might be agreed upon between the two, but generally speaking, the employer is the one that would set that. So his quota would be $31,500, but if he sells more than that, then he gets an extra commission on top of his salary. The quota is, yes. So how much of the product that he sold? Yes. So his quota, he has to sell $31,500. If he goes over and above that, though, he's going to get 2% of any amount that's over that $31,500. So he's got an incentive to try and sell more, right? Because he's going to get part of that. He gets paid biweekly. This is his salary. So his biweekly salary would just be the annual salary of $30,000 divided by 26 pays. So his base earnings are $1153.85. His quota, he exceeded the quota of $31,500 by $8,500. $8,500 times 2% is $170, so he got an additional $170 commission with that. So now we're just going to add those two together, and that was just this pay period. Next pay period, maybe he sells $50,000, right? Maybe he sells $20,000, he doesn't make his quota. Oftentimes when that happens, when they don't make their quota, then the next pay period, they'll subtract any that went over and above the current quota. So, for example, let's say that he only sold $21,500. I'm going to make it a nice even $10,000 difference. He's still going to get his salary, but next month, he's going to have to sell $41,500 in order to get to the commission level. So he's going to have to make up that difference. That oftentimes happens, where that commission or that if you don't make your quota, it's going to be offset in the future. You're going to make it somehow. Does that make sense? Yeah. So you're going to have to make it up. Okay. We talked about this early in the chapter, these non-discretionary bonuses. So remember, non-discretionary bonuses, these are things that the employee knows, they know how to earn them. So if you don't have any accidents for the week, you're going to get a $50 bonus. You know what you have to do, right? You have to not have any accidents for the week, and then you'll get that $50. So the employee has some control over it. As opposed to a discretionary bonus where it's just, hey, you did a great job this week. Excellent work. Here's an extra $50. That's a discretionary bonus. If it's a non-discretionary bonus, that $50 has to be included in the calculation for overtime pay. So essentially what that does is it increases your overtime pay as well for that week. Not permanently, just for that week. So here's an example. Jamil earns $13.50 an hour. He earned a safety bonus of $85. He worked 44 hours this week. So when we're calculating what that rate is for overtime, those 4 hours, we have to include the $85 in the calculation. So here's how we do that. Again, we're using the overtime premium. Sorry. So 44 hours times $13.50, $594, plus $85. So his total pay, regular pay, $679 for the 44 hours. We divide that by 44 hours and to get $15.43 regular hourly rate of pay. That's what our bonus is going to be based on. So now it upped his regular rate of pay, that $85 upped his regular rate of pay to $15.43 from $13.50. We're going to use that to calculate the overtime. So this in effect increased his regular pay just because he got an extra $85, but then it also increased what his overtime rate is. Does that make sense? Yes? No? Okay, so what's the question? A non-discretionary bonus. Only non-discretionary. A surprise bonus, a bonus that's completely controlled by the employer that you didn't know about, would not be included in the rate of pay. That would just be, well, knowing about it means you have some control over it. Not necessarily, you know what you need to do in order to earn that bonus.
So that bonus is part of your pay.
Yes, but you have to do something to earn it. So, for example, let's say if you don't call in, anybody who doesn't call in sick for the month gets an extra $100 bonus on their first week of pay the following month. That $100 is going to be included in the calculation of overtime, their overtime rate. So when we're calculating what their overtime rate is, that $100 is going to get added into the calculation. So let's just say they make, all right.
Okay, I get it.
Is that,
I get it.
you sure?
Yes, I understand.
Does that, everybody else? Jason, kind of. Okay. So let's say we've got, I know there's an example up here, but so we'll use that $100. There's a $100 discretionary bonus. And you worked 45 hours, and your regular rate of pay is $10 an hour. Now, without that bonus, you would get paid $15 an hour for the $5 of overtime. If that bonus didn't exist,
Like time and a half.
yes, for time and a half, you would get paid $15 an hour for that extra 5 hours. Right. But because you got this non-discretionary bonus, that's going to change the overtime rate. Okay. And so following the calculations here, so $10 an hour times 45 hours is $450, right? Plus, we're going to add that bonus, $550. Now, we're going to divide it by the hours you worked, the 45. And I need a calculator for this one. Oh, come on. I brought this here so I'd have something. 1222? All right. 1222. Now the overtime is going to be based on $12.22 an hour rather than $10. So in this case, they use the overtime premium. So this becomes our regular rate of pay of $12.22. So times, how'd they do this here? Times 0.5 was that 611? Times 5 hours, 30.55. I get that right? So the total amount then is going to be $550, and the 1 is included up here because we did 10 times the full 45. Okay, so $550 plus $30.55 is $580.55 for the total pay. If we didn't have that $100, if it was a discretionary bonus, then what would happen is we would just take the $450 for our 45 hours plus our overtime. Sorry, for our 400, it would just be the $550, wouldn't it? So 440 times 10, 400, and 5 times 15, 75. I'll be something different. And then plus the bonus of 100. So it would be 575 if it was a discretionary bonus. Does that make sense? You're shaking your head, me. What? I know that's low. I'm sorry. Got it?
Yep.
Okay. Does that make sense? Any other questions? So, but again, it's only for the non-discretionary bonuses. Discretionary bonuses, all you're going to do is you're going to do your regular calculation and then slap that bonus on top of whatever it is.
Without the overtime?
Without calculating the overtime. They would still get paid for the overtime, but the overtime rate would be different. Right? It would be a little bit lower. It'd just be what the regular overtime rate is. So if you're going to get a non-discretionary bonus, pair it up with overtime during the week. Or if you're going to work overtime, pair it up with a non-discretionary bonus, because then you're going to boost it even more. Even not by a whole lot, but $4.45. After taxes, 38 cents. All right. Let's see. Profit sharing plans. I don't really have a whole lot to say about profit sharing plans. That's just when companies share, like they give employees a portion of the profits that they make. So it's like a incentive to better the overall company. So if, company says, hey, each employee will get, 1% of our net profits during the year. That encourages employees to help increase revenue, but also to help decrease expenses, right? Because that will increase the net profit in there. Hy-Vee is a employee owned, so they have a profit sharing. I think theirs goes into like a retirement plan, I believe. So companies can do that too. All right. Where are we? 2:00. Excellent. Hold on just a second. I just have a few more slides to go through.